Hey, everybody. Joshua Phillips here with Churchill Mortgage, sending this out on behalf of not only myself, but my wife, Amy, my son, Jesse. We are the Phillips team, and hope you enjoy this market update. Well, before we get started, I just want to say congratulations to the Tennessee Titans. I mean, I guess it's a congratulations for getting the #1 pick in the NFL draft last night. Fingers crossed. I was thinking, like, what's going to be better a year from now, the Titans or mortgage rates? And you know what? I'm going to go with mortgage rates. I think the mortgage rates should be better a year from now than the Tennessee Titans are. So, but let's start out here as we always like to do, as I always like to do on CNBC with our headline here. And this came out just a couple days ago. Now, this headline's a little bit old. These headlines run, these reports run a few days behind. So this says, weekly mortgage demand plunges nearly 13% as interest rates hit 2-month high. I do not like the word plunge. Well, I mean, I have to say personally, we've been quite busy. My team's having a great month, helping a number of people purchase homes, a couple refinances. My wife's doing a construction loan this month. So, I mean, we're pretty busy. So, but yeah, I mean, it has been a struggle recently. Now, let's switch over here to our mortgage-backed security chart. And again, as I say almost every time I do a video, what you're seeing here is a screen that most loan officers, I'd say every good professional loan officer in America, uses this information. It's a mortgage-backed security chart, which is where mortgage rates derive their values most directly. And what we want to see is we want to see green. Green is good, red is bad. And the higher that security price, the better mortgage rates are doing. Well, I really like what we're seeing here. I mean, obviously it'd be great if things were just better and better and better. But honestly, I really like what we're seeing here in the chart. We had mortgage rates back at early in the month kind of hit their best levels really of the year, probably in the last several months, and then quickly plunge, with this as the tariff news was being evaluated further, and we saw mortgage rates get to their worst levels, or like they said, worst levels in a couple months, back just 2 weeks ago. And but you know what? We've kind of clawed our way out of it, and getting some good green. This was a good week, candlestick wise. Now keep in mind, as I said last week, I mean, from top to bottom this year, we have not seen rates move more than 0.5%. So you got to keep in mind, these are not huge changes with mortgage rates. They're just changing, up and down. Again, the range this year has been about 0.5%, probably from the lows to the highs. So, but, hey, we'd rather see the lows than the highs. So, but right now we're kind of in the middle, but I really like what we're seeing in the market with mortgage-backed securities. Technically, these lines are called moving averages. You can see that, reddish one that is the 25-day moving average. We have broken above the moving averages now, which is actually a really good sign, and could indicate that we've got some more room to run, where now these levels will act as some support for us, and hopefully we'll see mortgage rates continue to improve, and maybe we'll get back to that level we were at a couple weeks ago, 2-3 weeks ago. All right, let's pull back here just a little bit. If we look at if you look at a 6-month chart, it's just been a little up, a little down. Again, nothing. If you go back even the last 6 months, probably haven't seen rates move more than 0.75%. Maybe in the last year, 1%. So we're looking at pretty narrow. This is a 1-year chart right here. Rates at their worst levels back in January, and then we were at our best levels last September. We got kind of close here a couple weeks ago. So, but you know what? Overall, I feel pretty good about things. There's always this surprise with Trump and with the tariffs and all that, but it seems like things have settled down. And if I were to guess, purely guess, I think we're going to have a good second half of the year. I think mortgage rates are stabilizing. I think they've shown some resilience, and I think that mortgage rates hopefully will improve. I think we're going to stay in the sixes all year, best case. I'm actually tipped up into the sevens, but I think this year we're going to be in the sixes, hopefully moving from maybe upper sixes to the lower sixes. That would be my best guess. And maybe next year, fingers crossed, maybe we'll see something with a 5 next year. Again, better than the Tennessee Titans. So that's my hope, is that we'll see rates maybe in the 5s next year. Maybe that's when we'll start seeing some refinance activity for all my clients that have hung on and for the last couple of years and hoping for better interest rates. I hope that the opportunity is coming in the next 12 months where maybe we'll see something with a 5 with reasonable closing costs, and we'll have some opportunity there. The one thing to keep in mind, if you're waiting to buy a home, and thank you if you watched the video this long, but if you're waiting to buy a home, just keep in mind that as interest rates go down, more demand, more people are going to jump into the market. Man, when rates get into the 5s, Lord willing, there's going to be a lot of people out looking, and guess what's going to happen to home prices? They are going to shoot up. That's why there's some common sense to saying maybe it's better to go ahead and buy right now while it's a little slow, while I can get a little bit of a deal, while I can get some closing costs paid. Buy now, refinance later. I think that could make some sense. I absolutely do not think that home prices are going to decline. I think they're going to continue to remain steady to going up. And as mortgage rates decline, we will see home prices actually go up. So I think it's good news. I'm optimistic. So anyway, well, listen, if we can be of any assistance to you, if you want to talk about your situation, what interest rates would be for you, you want to get pre-approved, we are here to help you, the Phillips team. I'm Joshua Phillips. Have a great day. Bye.